I'm at Georgetown University for the Real Estate Luminary Series sponsored by Georgetown University and McDonough Business School and NARI. Joining me is Scott Sellers, CEO of Archstone. Scott, you have experience on both the public side and the private side.
Yeah.
How has the challenges changed being on the private side during this difficult economic time?
You know, I've always been a strong proponent of public company ownership of real estate, and I think being private, hasn't changed that. One of the biggest challenges we've seen is that we were always a bit contrarian in our investment style and kind of willing to go against the grain, and we created a lot of value that way. I'd say that's much more difficult to do as a private company than a public company, because as a private company you have to go out and convince other investors that they should follow your instincts, and we tried to do that in early 2009, and it was pretty tough to impossible to raise capital.
And GSEs have obviously been a very important source of capital for multifamily companies. We hear a lot about the regulation that's coming there.
Right.
Well, what's your take on that, and what do you think the impact might be?
The challenge, I think, is there's no question they should be in that business, but there's a lot of politics involved. So I have spoken to Sean Donovan, who has expressed his strong support for multifamily homes, ownership, rental especially, and the desire for the GSEs to have a continuing role in that. I think how that's going to take shape, we just don't know yet.
And by most accounts, all the fundamentals in the apartment space are looking very good, are trending up. What trend has you the most optimistic going ahead?
Well, we like increasing rents, and we really started increasing our rents aggressively early 2010. And a number of our markets, year over year, rental rates are up as much as 12%. So obviously that's great. Occupancies for us have been strong throughout the downturn, and our net operating income in 2009 was only down less than 1%. So the fact that we had a very modest reduction in our NOI, and now we're seeing very strong rental increases, I think bodes really well for the future, particularly considering we're seeing that kind of strength without any big job growth yet.
And is job growth then the biggest variable, the biggest potential concern for you? The
biggest concern for us, as I assume it is for any real estate owner, is deflation. Deflationary environment's not good for real estate. So I personally don't believe we'll have a deflationary environment, but it's bandied about a lot. So, in terms of tops of list of concerns, if that were to become an eventuality, that would be problematic. But that aside, the biggest focus for us is, when does job growth come back with some level of strength?
Scott, thank you very much for joining us.
Thanks very much.
For REIT.com, I'm Matt Bichard.